Hi, Econ 445. How's everybody doing today? Just realized you can't answer. All right. Hope everybody's doing well. We got this. We're getting through. And we're seeing the finish line, right? Because we only have a couple weeks left in the semester. We got a couple more topics to cover. We got the taxation project, we got the final exam, and then you're good to go. Right? So let's figure this out. Let's go ahead. I'm going to share the screen. Let's talk about property taxes today. So share screen, put me down here. All right, so property taxes are one of the most important tools in the local government toolkit, right? But before we even get into that discussion, let's talk about something. Your taxation project rough draft is due by April 15th. All right, taxation project, original tax day. Just go ahead and think of the two together. Okay, I can give you wiggle room on the homework. You haven't finished homework 7 yet? That's fine. Send it to me late. I don't care as long as I get it. We'll figure it out. Haven't finished chapter homework 8 yet? That's okay. Send it to me anyways. We'll figure it out. That's fine. I can have wiggle room on the homeworks, but I can't have wiggle rooms when it comes to the project, especially because we have certain AACSB accreditation things that we need when it comes to different sorts of projects. Like that one, I can't have wiggle room on. So this entire conversation today is going to be short. I'm going to give you a very short lecture. It's going to be very in and out. And the reason for this is because I need you to go work on your tax project. It's due Wednesday. It must be in my hand by midnight on Wednesday. Please give it to me, okay? So, yeah, work on your taxation project rough drafts. Cool. Get them into me. It'll take me a couple days to work through all of them and put notes on them. I will save the notes. I will send them back to you, and you can give me your final draft eventually, right? Okay, cool. Now that we've had that discussion, let's think about property taxes. So property taxes are a major source of revenue for local governments, right? We got our national governments. They have that corporate income tax. They have those individual income taxes. They have a couple different revenue streams, right? Then we have state. State has their state income taxes. They have state sales tax. They have a lot of excise taxes on things like gasoline and stuff like that. And then we come down to the local governments. Local governments need money too, right? Have you seen the watershed? I live by the watershed. The watershed is expensive to maintain because it is nice. All right, so how do they raise money? There's some grants that they can get from federal and state governments. They can put small percentages on sales taxes. So some places do that. Edwardsville does that. Then they can, what else can they do? They can do sales taxes. Then some places they can do a local level income tax, but it's normally for a very minimal amount. And then there's property taxes. So property taxes are the really big source of revenue. A lot of what it's used for is typically schools. So why do we tax properties? The reason why we tax properties is because we're trying to make it so that taxes are a little bit higher on what we think might be wealthier or more well-off families, because generally those are ones that are in the better sort of houses, right? So they do this to be able to try to give a lot of taxes to people that might have more money or might live in better housing, while having a lesser tax burden on people that might have lower income housing and things like that. But the purpose of raising this money is often to fund schools. It can be on other things too, but for the most part, schools. So that's something really major. That's something to think about. And then we have to think about what our tax burden actually is. So your tax burden is based on the assessed property value. That doesn't mean necessarily what you can sell your house for, right? Homeowners pay taxes only on the assessed ratio. So let's say that this house, I think the house I'm in was like last sold in the 1990s for like $90,000. So let's say that it was like assessed for $90,000. But I did some work on the property, and there's a new sewer line, and things are really good, and there's a new roof and stuff like that. Maybe I could actually sell this house for $140, but it was assessed at $90,000. Well, then I would pay my tax burden based upon a ratio based on that $90,000, right? But maybe it goes the other way too. It might go the other way. Maybe the house was worth 140, but the sewer line got damaged and the roof collapsed and there's a bunch of other stuff. And now it's really, I can only really sell it for 90, but I'm paying taxes based upon that assessed property value of 140, right? So there's going to be these assessed property values. These are determined by people in clipboards, right? They come by, they have their clipboards. Oh, yes, assessments today. And then they go around and they look at that house and they're like, 4 windows. look at that chimney. That looks like a new roof they got over there. Did they add a garage? And they write down all these notes and they assess what the value of that property might be, right? Then based upon that assessed value, there's some percentage that you have to pay relative in property taxes, or there's some percentage that you're going to have taxes based off of. I'm from Columbia, South Carolina. Property taxes are actually really low there, like crazy low. Because there's an assessed ratio. So we have our assessment property value, and then about 4% of that assessed property value, so let's say it's $90,000, about 4% of that $90,000 is the assessed property ratio. And I will have to pay taxes based upon that. Really small amount. It can go all the way up to 100%. In Providence, Rhode Island, it could be that your $90,000 house gets assessed at $90,000, and then you're taxed on that entire $90,000 amount. Assessments can vary widely, and it really depends on what the local governments need to finance and how they've decided to structure it, right? So that's crazy. That's a lot of things. So what is really included in property taxes? All right, let's think about this typical home. And this is just like the first home that I could find online that like didn't have any sort of licensing for use. It's just like a free license use. Okay, but anyways, so we have the property, right? Property taxes are on this land that this house sells on. If this house did not exist, you'd still have to pay property taxes on that land. Okay. Now, land in itself, valuable, but maybe not the most valuable. Then we add a house. This house has a garage, it has windows, it has this nice looking roof, stuff like that. Well, you're taxed your property taxes not only on this land, but on any property or structures that you have on it. This can be houses, it can be garages, it could be businesses, it could be anything else, right? So we're in Illinois, right? We already know, kind of from our talk in previous parts about taxation, that property taxes in Illinois are pretty high, right? So property taxes per capita, which means per person, in a place like South Carolina, where I'm originally from, it's like $1,200. In North Carolina, it's less than that. It's like $974 per person on average. California, really high at $1,600 per person. But then we get over here to Illinois. Illinois has some of the most expensive property taxes per person outside of the northeastern corridor. So wow, that can be substantial, right? That's a lot of property taxes that are being collected, and they use that to be able to fund a lot of the local level projects that happen. So we have to think about, because remember, we've had a lot of discussions on tax incidence lately. We have to figure out who really bears the burden of a property tax. So there's a couple different views on this. We could put it out on a graph, which we often do, but let's see what some of the competing theories are. When we're thinking about the incidence of property taxes, there's one group of people that are very traditional. They look at the partial equilibrium approach. Remember, we had a partial equilibrium where we look at the changes in prices and quantity of just one good, and then we have general equilibrium where we look at how the prices and quantity changes in one good affects all these other goods, right? But the traditionalists, they only care about partial equilibrium. They say that property taxes fall on the landowners, right? And on structures, owners and users, because it's very elastic, right? That you can't change the supply of land. So because they can't really change, it's very inelastic. They have like one house and one plot of land, and they can't just magically make that disappear off the face of the earth. They're going to have to pay for a lot of these property taxes. The burdens are going to fall on the structure's users, the structure's owners, and the landowners. Now that's the traditional idea. That's the idea if we were only caring about this property tax affecting the use of this land. But it's not always like that, right? Then there's also the general equilibrium school of thought that thinks not only how are we affecting the land and the structures, but other related things. This is the idea of a capital tax. So taxes reduce return to capital, right? If I have a bunch of land, and let's say I have a bunch of dairy farms on it or something, the more taxes I pay on my dairy farms, that's the less money I'm going to be making off my capital and stuff, right? Well, this is going to drive capital out of certain places. That means, like, let's say that I have a choice in between two different cities, and I can build my dairy farm on my land in Edwardsville, or I can put my land on my dairy farm, or my dairy farm on my land in Columbia, South Carolina. Well, I might go to the one with the lesser property taxes, right? I'm going to have less overhead costs in that situation. In that situation, this tax, if I was in Illinois, would reduce the amount that I'm going to be able to put in my pocket at the end of the day, but maybe not necessarily in Columbia, South Carolina. So we got to think about who these taxes affect, and a lot of the time it's who owns the capital, but we got to think about it in a broader sense. Then we also have the idea, the third competing idea of who really bears property taxes, and this is the idea of benefits taxes, right? Property tax is meant to finance local government spending, and ideally this is meant to benefit local homeowners, right? You own a home and you are benefited by having an educated community, so you'd want to pay into the school district because you are made better than off from that. You live in Edwardsville and you really like walking the watershed and all the flowers and the bees and stuff, so yeah, you get a benefit from that. Maybe you should pay property taxes about this benefit. This is the idea all the way back to taboo, right? The taboo equilibrium said that there's not really a burden of taxation if we think about it, because you're receiving a benefit. Because when we're thinking about who bears the burden of a tax, we're trying to figure out who's worse off, but we're not also looking at the benefits that these people get from it. So it might be that I'm paying property taxes and it sucks to pay property taxes, but if I'm in a better educated society with a lot of prettier things and I get a lot of personal benefit from that, well, that benefit might equal that cost that I'm having, right? I look so professional in like the little picture in the corner, and then I remember that I'm wearing like cat pajama pants. Please don't judge me. Anyways, so we have our three competing ideas of like who really bears the incidence of a property tax, and it's something we have to think about, because we have to think about not only one market, but all the surrounding markets, and then who's really benefiting. So we have to think about our types of property taxes, right? There's two important distinctions on levying different types of property taxes. First, we have to think, is this a residential home or a business? There's a lot of differences in how much I'm going to get charged, assuming that I own this house, so how much I get charged in property taxes versus how much property taxes are going to be levied on the businesses that are in the warehouse district in Edwardsville, right? Some people argue, actually, most local governments argue, that to encourage economic development, to really encourage people to come to a city or a town, like, hey, we want an Amazon plant here or something. How do we do that? Well, we try to encourage economic development, and one of the ways of doing this is by competing when it comes to property taxes. So one of the competing ideas is that business property taxes need to be a lot lower than residential, because residential, you're moving to the area whose policies most meet yours. But when it's a business, well, if I charge them a lower tax amount, we at least get the business there, and a lower tax amount of $50 billion or something is still a lot, right? So ideally, you would put smaller property taxes on land and structures that are developed by businesses than you would residential homeowners. Then we also have to think of land versus improvements, right? Land is inelastically supplied. There is so much land. That is it. We have so many square miles, give or take, depending on what like ocean sea levels are doing in global warming. There's only so many miles of land. It's a relatively inelastic thing. If I own land, that land will be there until the end of something. So since land is inelastically supplied, if we're going back to our general ideas of taxation, well, that's what should be taxed, right? But it's really hard to separate the land's value from the structure's value. I can't go to every person in my neighborhood and say like, oh, half acre, give me this much, and oh, half acre, give me that much, when one has a $500,000 house on it and one has a $10,000 shack. Right? Maybe those shouldn't necessarily have the same level of taxes, but we have to think about what this land's value is relative to the structural values that are on top of it. The thing is, structures aren't inelastically supplied. So why are we putting the taxes on structures? Well, a lot of it's for the purpose of trying to make it so that taxes are more put on people who can financially manage taxes, or are more likely to be able to pay for these taxes, or might get a larger amount of benefit from some of the programs that we're doing. So it's really hard to separate these two pieces. In practice, we end up taxing both. We tax not only the land your house sits on, we tax what your house is valued at too. That's what the whole purpose of assessments, because it's much easier to understand assessments when I can say, 4 windows and a chimney must equal X, right? So let's give an example. Let's think about property taxes when we're thinking about businesses. Property tax breaks for businesses are rather ubiquitous, right? Or ambiguous. I have no idea if I'm pronouncing that right. I've always just typed it but never said it. Anyways, we've kind of determined that it makes sense to give businesses property tax cuts because you want to incentivize them to a different location. Let's give some examples. Remember when Boeing was trying to figure out where to put their plants? So they ended up putting one, I think, in Charleston, South Carolina, or nearby Charleston, South Carolina, and there's one in Washington. Well, what did the state of Washington do? The state of Washington made an $8.7 billion deal for Boeing to stay there in 2013 because Boeing was like, wow, our property taxes are ridiculous. It's so expensive to be in Washington. We're going to move. And they were like, you're definitely not going to move. We're going to give you some discounts to incentivize the business to stay there, right? Alcoa. In 2007, they were like, wow, New York property taxes are insane. We are hemorrhaging money. We need to go somewhere cheaper. We're going to move. And the state of New York was like, $5.6 billion discount. And then Alcoa was like, oh, okay, yeah, we'll stay. That sounds pretty good. And then they kept bringing in business to the area. And they kept bringing in jobs. And they kept bringing in revenue, even though there was a smaller tax amount that they were paying by billions of dollars, right? Foxconn needed to open a new U.S. plant in 2017. So 7 different states came in and they brought in different proposals and they said, okay, we're going to give you this tax break. And Wisconsin ended up outbidding them by billions of dollars to try to get Foxconn there because they knew that it was going to hire hundreds of thousands of people. I think it's tens of thousands actually, but it's going to hire a lot of people and bring in a lot of money and do things. So sometimes they're willing to give up property taxes for these individual types of things when it comes to businesses, right? Do you all remember the Amazon debacle? Like the HQ2 area, like the next major like hub of Amazon when they were trying to figure out what was going on. All these different cities came out with these crazy ideas. I was living in Atlanta at the time, and I think like Atlanta had decided that a small suburb outside of Atlanta, they were just going to rename it like the city of Amazon or something and give them all this land for really reduced to 0 property tax price. And those are different sort of incentives that you want to have because you need those businesses to come there, right? If a resident leaves, you lose some money in property taxes, maybe like 10, 20,000, if that. You lose some money in sales taxes. You lose some money in local income taxes. That happens to be a thing. But if you lose a business, you lose all that money the business brings in, and you lose all the money that the people who work there would have brought in, and you lose all the money from all the houses and property taxes that the people who work there would have paid, and other things like that, right? So wages and property values rise faster in cities that successfully attract industrial plants. Let's say, and this didn't happen obviously, but let's say that Edwardsville won the bid for the Amazon HQ2, right? The second headquarters is going to come here. What would happen? Okay, first thing that would happen, land. They would take over some land. There'd be less land available because there's a lot of land for Amazon. Okay, next thing that happens, workers. Hundreds of thousands of workers would have to locate to Edwardsville. Well, why would they do that? One, Amazon has to pay well, so wages go up because they're incentivizing people to move there. What's the next thing that happens? Those people need a place to live. They're going to buy housing. They buy housing and they're competing for housing. What happens to property values? They go up. If you successfully bring in some sort of industrial plant or some sort of manufacturing plant or some sort of distribution plant, you're going to bring in people. And that makes wages go up, and that makes property values go up. And when property values go up, people pay more property taxes. So being able to give this small tax break to a company can sometimes result in a lot more revenue coming in for a city, which is why they try to make these decisions, or why they try to incentivize these decisions, because at the end of the day, they're supposed to be in the best interest of the people, right? However, this doesn't matter on a national level, right? States compete to bring businesses there. Cities compete to bring businesses there. But if a business is deciding in between Wisconsin and Edwardsville, Illinois, and Columbia, South Carolina, that does not matter to the national government because they're still going to make their national taxes no matter where they're really located. So these are primarily influential factors for local and state governments. These are things that they're going to be concerned about, but national governments aren't going to be concerned concerned about. So, wow, this picture looks really bad blown up. The Edwardsville Warehouse District, right? They employ like 7,000 people. And they're growing. Every single time that you drive to campus or back, which I'm guessing you haven't done in a while, but you might again soon. I really hope so. I miss my office. Every time you drive to campus and back, you see these warehouses on the side of the road. Some of them went to, oh gosh, I don't actually remember their names. I should probably look it up. But there's a bunch of them, right? Lots of these things. They employ lots of people, and you want to know why they came here? They came here because Edwardsville said a long time ago, okay, we have this floodplain. Let's put in some decent dams and drain it. They put in some decent dams and drain it. Wow, we have a lot of cool land that's right off a highway, and there's these new laws that truckers can only drive so far now. Why don't we go to the major businesses and we mentioned to them, like, hey, we're like halfway along your route and truck drivers aren't supposed to drive that far anymore. Have you thought about locating here in Edwardsville? And then they say, wow, but Illinois has extremely insane property taxes. And then Edwardsville says, well, this is an enterprise zone. We're trying to bring in some new business. We're trying to bring in some new life to our community, bring in some new jobs. Maybe we'll give you a tax break on this land. That plan was so popular that now they're building these before they even have them rented out because they know that there's like 100% guarantee that someone's going to want it, right? So that's just kind of cool. It's something that a local government's doing to be able to incentivize businesses to come in by manipulating taxes. So at the end of the day, you think like, wow, taxes are just not fun. These are lines on a piece of paper. I'm not an accountant. Why do I care about this? Because you can manipulate taxes by small little amounts and employ thousands of people, or really help get the money to be able to build new parks or to improve your school district by a lot. And you do this by small manipulations in tax policies. That's just so cool. That's just so neat. So property taxes is a really interesting thing. Now, property taxes do highly influence different sort of business climates. So there's some states that businesses don't necessarily want to go to, right? Some of them not as much, not really as business friendly, right? We have ones like New York where it's extremely expensive to start a business in. We have ones like Illinois where we are. It's not exactly the most friendly or hospitable place to businesses who want to come in. The property taxes, especially for businesses, if that was the only thing that we were looking at, so we were in a partial equilibrium, it does make it so the state business tax climate doesn't look as inviting in the area, right? While places that have lower taxes tend to incentivize more businesses to them. Now, do we necessarily see them going that way? Do we see every single business going to North Dakota? Well, we don't, because there's a lot of other things that are going to influence the state business tax climate. But property taxes are part of that. So, like I said, short lecture because get to your projects and please give me your projects. All right, but property taxes are vastly different across municipalities. Taxes here are not the same as Granite City, are not the same as Glen Carbon, are not the same as Ferguson, Missouri, right? They're vastly different, and they are an important source of funding for a lot of local level projects, whether it be the watershed, whether it be the school district, whether it be a bunch of other things. There's different local level property taxes that go to funding a lot of the projects that we enjoy. So we have to think about, are we really bearing the burden of this tax? Is this tax really affecting us, the landowners, our future landowners? Or are we receiving benefits that are similar to this by having a better society or a better place to live? Well, those are decisions that you need to make. And the way that you make this is by voting with your feet, all the way back to the taboo idea that you're going to move to a place that has some of the best policies for you, ideally. So there's a few competing ideas on this incidence of property taxes, and I would know what those three main competing ideas look like and think about the fact that when we want to incentivize business location decisions, the part that property taxes pay as a bargaining chip. Okay, that's it. That's all I got for you today. Go do your work. I look forward to reading all your proposals. Thank you. If you're behind on any of the homeworks, it's not too late. Please send them to me. I'll see y'all soon. Peace out.